companies. Indeed, Sarawak is a very significant state for Malaysia. They are the third largest among all states. Last year, Sarawak economy grew about 6.5%, slightly slower compared to the overall Malaysian. Malaysian economy expanded about 8.2%, but nevertheless, Sarawak economy is very significant for Malaysia because they are the natural resources producer for the country, among the biggest. One of it is oil palm, natural gas, and timber. So today we will bring you two companies for the corporate day, which is Cahaya Mata Sarawak and also OM. There are fewer housekeeping that we need to announce shortly. I will announce shortly, but just before that, before we start, just a small announcement, just to inform that beginning Monday, BIMB Securities will be operating from a new office. We will be having a new address. We'll be moving to Menara Bank Islam. The official letter will be issued to all the clients, and I think already issued and on the way to be issued. So just to heads up that we'll be operating from Menara Bank Islam beginning Monday. So without further ado, there are a few housekeeping that we need to do before we begin. First off, this is the itinerary. I think the team, okay, this is the program itinerary. You can see that the registration ended about 9:30, but then again, you can see it is still open nonetheless. Shortly will be prayers recital. There will be economic presentation by Encik Imran, our chief economist, and then followed by about 1 hour presentation by OM Adrian Lau, the managing director OM Materials, and then followed by Cahaya Mata Sarawak. Okay, for all your question, if you have anything to ask about economy, about OM, about Cahaya Mata Sarawak, do type on the chat box. I will be moderating the question and ask the question to the presenter. And okay, some housekeeping exercise. Housekeeping exercise. This is SIDC accredited event. You are given 10 points. Please do stay for you to be eligible to get 10 CPE point, which is half of your our yearly requirement. You need to stay for now for about 3 hours. Note that this is recorded. We'll be sending the name to Securities Commission. For those that are eligible for CMSRL license. For those that for those that joining the event for CPE points, do complete the pre-assessment and CPE seminar form before the event start. Remain logged in for the entire session. Please be reminded that your time in and out of the system are recorded, and please do jot down your actual name so that we can track you are actually the one sitting in for the program for the CPA points. You can complete the post-assessment after the session ends, and note that the post-assessment form will be open at noon today and will be closed within a week, which is next Thursday, which is on the 27th of July. Now, my team is here. You can email us or you can type in the chat box if you have technical issues or you need some help. We are there to help you. Now, kindly use your full name in the WebEx platform for attendance. Note that all the materials have been uploaded. Those that register for learning hours for Bank Islam Group, BIMB Securities or BIMB Asset, kindly scan the QR code that will be flashed out later. I think once the event finish for attendance and course evaluation. Next one, okay. Without further ado, let's call Azim Faris, our head of equity and also our oil and gas analyst for prayers recital. Before we pass to Encik Imran to share a bit about global economy and Malaysian economy and the latest development. Azim.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين الرحمن الرحيم مالك يوم الدين إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين آمين. بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين وعلى آله وصحبه أجمعين اللهم إنا نسألك لسانا رطبا بذكرك وقلبا مفعما بشكرك وبدنا حينا لينا بطاعتك اللهم إنا نسألك إيمانا كاملا ونسألك قلبا خاشعا ونسألك علما نافعا ونسألك يقينا صادقا ونسألك دينا قيما ونسألك العافية من كل بلية ونسألك تمام الغنى عن الناس هب لنا حقيقة الإيمان بك حتى لا نخاف ولا نرجو غيرك ولا نعبد شيئا سواك واجعل يدك مبسوطة علينا وعلى أهلنا وأولادنا ومن معنا برحمتك ولا تكلنا إلى أنفسنا طرفة عين ولا أقل من ذلك يا نعم المجيب. O Allah, grant us a soft tongue that always remembers and mentions your name, a heart that is full of gratitude for your blessings, and a light body that is obedient to your commands. O Allah, grant us perfect faith, a humble heart, useful knowledge, and a truly firm conviction. O Allah, grant us a wise and excellent way of life, and save us from all dangers and disasters. We ask you, O Allah, for sufficiency, so that we do not have to rely on the help of others. O Allah, give us true faith, so that we do not fear or hope for anyone other than you. Spread your mercy upon us, our families, our children, and all those who are with us. O Allah, do not leave our fate to be determined by ourselves, even for a blink of an eye, or an easier and faster way. O Lord, who answered prayers, please grant our request. O Allah, in conjunction with the BIMB Securities Corporate Day event today, do guide us to be among those whom you have guided. Do grant us good health and forgiveness, so that we shall be among those whom you have granted good health and forgiveness. O Allah, you are the most forgiving and the most merciful, and you love to forgive. Therefore, forgive us, forgive all our sins. ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار وصلى الله على سيدنا محمد وعلى آله وصحبه أجمعين والحمد لله رب العالمين آمين يا رب العالمين.
Thank you, Azim, for the prayers recital. Okay, without further ado, I would like to call Encik Imran, our chief economist at BIMB Securities. Indeed, Imran has been a very key player in our team. He has over 25 years experience in research in economic, capital market currency, started his career in 1993. So that is actually like a good more than 20 years. He worked in various departments in among others in foreign exchange market, started his career as equity economist in MIDF, then joined KFH, then investment to head the forex treasury. He holds a bachelor of economic degree from University of New England, and he also is a certified Islamic finance executive from Etika Islamic Finance, Etika Institute of Islamic Finance, Dubai. He completed his finance and is currently pursuing his Doctor of Pacific in Cooperative Finance. Now, before we begin, the corporate day is really indeed for us to know is critical or important for us to know what is actually the current situation of global economy, the domestic economy. What will be the insight of next week federal FOMC policy meeting? Could this be another rise? Could they pause? Again, just to reiterate, if you have any question, which I believe you do, please type in the chat box all question and answers for the company, economy, OM materials, and also Cahaya Mata Sarawak. you put in the chat box, and we will moderate the question and answer to the company and also to Imran. Okay, Imran, note that Imran will be presenting about half an hour. Then there will be about maybe 10 minutes for question and answers, followed by OM. Over to you, Imran.
Yeah, Assalamualaikum warahmatullahi and thank you, Dr. Nani. Basically, we're talking about the economy. First, we look at the global economy and then Malaysian economy, and also we touch a bit on the Sarawak economy. Okay, on the global economy, I think we know that the world has started the new year with gloomy growth prospects, with some major economies on the cusp of recession. I mean, pressure from persistent inflation, and in May, first half of 2023, the global economy was rocked by the bank failures in advanced economies and amid aggressive rate hikes, although it did not turn out as contagious as initially feared. The global economy entered the second half of 2023 at where it all started, which is high interest rates, sticky inflation, volatile commodity prices, and a tight labor market. Considering the conundrum of the policy makers face in bringing back to some degrees the normalcy, more policy intervention is needed rather than less, and global economy basically is facing an increasing imminent slowdown as China's recovery momentum slows. I think if we look at the chart, we know that the overall economy has displayed greater resilience in the first half of 2023, surpassing expectations, and the world economy is expected to see full year grow more moderately in 2023, where we expect it to grow by 2.6% as compared to about 3.4% in 2024. And it is lower than the past 2 years of post-pandemic recovery. And I think that the 2.6% will be a year of slowdown, as the global economy normally grow on average of about 3% or higher. So I think the weaker growth in the advanced economies will be the major source of global slowdown as countries proceed with policy tightening after removing pandemic-related restrictions and stimulus to contain high inflation. But nevertheless, the strong labour market registered so far an increase in income helped to sustain spending growth, and as economies reopen and transition to the endemic phase, unemployment rate has continued to decline in both advanced and also the developing economies. We look at the economic data that have been coming out, and it has consistently outperformed pessimistic predictions over the past year. Although we still seeing that major economies do face some challenges, and for example, consistent with high interest rates, the manufacturing is showing weakness, especially in the US, China, and Europe, which means that the global growth in 2023 is highly likely to be weaker than 2022. I think overall, the sustained growth in the developing and emerging economies are crucial to support world economic growth, although the projected growth this year is expected to stabilize to be to more normal levels. And I think this 2.6% growth, I think we still represent a slowdown in the global economy. And the reason is because one is the full-blown war in Ukraine is affecting the global economy through the higher commodity prices, supply chain disruptions, and Russia's weaponization of energy supplies. This situation will persist throughout 2023 and most probably beyond 2023, as we expect the war to become a protracted conflict with no clear resolution. And the economic impact of the war is being felt especially strongly in Europe and to some extent in UK, and where energy intensive industries will struggle especially strongly in Europe and UK. In the US, the economy is starting to show signs of weakness as the economy only grew by 1.1% quarter on quarter during the first quarter of 2023 as compared to 2.5% in the fourth quarter of 2022. And what really concern is if you look at the growth in China, it has a fallen short of expectation, and the economy in the first quarter grew by 6.3%. Sorry, in the second quarter grew by 6.3%, which is faster than 4.5% growth in the first quarter. But on a quarterly basis, Chinese economy grew by only 0.8%, which is slowed sharply from the 2.2% increase in the first quarter. And if you look at the data that been coming out from China, we see that there's a slower consumer spending. For example, in June, the number of retail sales slowed to single-digit growth of only 3.7% as compared to 12.9% in May. So there's a worrying trend coming out from China. And if you look at the unemployment numbers, in June, the youth unemployment had another record high. I think if I can recall, it was about 21.3% in June as compared to 20.8% in May. So these are the issues that the Chinese officials will have to face, and anyway, we expect it to be to see more stimulus coming out from the Chinese government in the second half of the year. So I think overall for global economy in second half of 2023, we foresee that the subdued growth on the supply side would persist as business maintain cautious view on the future sales, and we expect delayed effect of the policy tightening will translate into weaker growth momentum, especially when households start to hold back the purchases and demand for credit. Okay, as we mentioned, one of the main issue that the global economy is facing is the inflationary pressure, and we expect global inflation to ease slightly in 2023, and inflation remain elevated in many countries, even though supply condition has improved. The price pressures are increasingly driven by surging demand, in contrast to early period of post-pandemic recovery where inflation was triggered by supply shocks from the supply disruptions. So I think although there has been improvement in the supply chain, the persistent high demand resulting from previous pandemic support measures coupled with improving employment and wage growth have exerted the pressure on prices. And again, the ongoing Russia-Ukraine war and the uncertainty state of the US-China relations have added for this strain to the situation. And I think the slowdown in global economic activity, the improvement in supply chains, the decline in commodity prices, and tighter global financial conditions are expected to contribute to the further moderation of price pressures in second half of 2023. And if you look at the in the country, for example, like in the US, headline inflation and core inflation have been slowing down so far. The headline inflation rose a modest 0.2% month-on-month in June, and the yearly rate of inflation decelerated to 3% from 4% in the previous month, the slowest since March 2021, and basically it was well off their peak of 9.1% in June 2022. The core CPI, however, remained high, and it rose 4.8%, although it was the slowest since 2020, October 2021. And I think despite more than 500 basis points of rate hikes, the labor market is still robust, and inflation is decelerating, and which growth is a key piece of the US inflation narrative, where and then I think the non-household services wages are decelerating as well, and that should further feed into core disinflation over the next 6 to 10 months. The consumer price inflation in the Eurozone decreased to 5.5% in June, down from 6.1% in May, and core inflation also seems to have turned a corner. The latest data from the UK, which was released yesterday, showed that although the inflation in UK is much stickier, it has gone down, and it slowed from 8.7 year on year to 7.9% in June. But core CPI also slowed from 7.1% to 6.9%. And for the Asian region, I think headline inflation is towards the pre-pandemic average as supply side pressures, grain and monetary tightening took hold. It has trended down in the sub-regions this year, along with fuel and food prices. And if we look at, for example, inflation in China is largely absent due to its weak domestic demand and falling factory prices. And the CPI in June was flat, 0%, and core inflation is to 0.4% in June from 0.6% in May. So I think overall, the inflation is now forecast to slow to 1% in Asia it was forecast by the Asian Development Bank. And for the Southeast Asia, the ADB revised down the forecast from 4.4% to 4.3% in 2023. Because of, I think in response to the elevated inflation, the major central banks continued to raise their policy interest rate higher, and the additional rate hikes was also facilitated by the resilience in demand conditions, as well as a tight, robust labor market, even though credit costs have reached the multi-year high. And in fact, to ensure that prices pressures will be contained, requires growth to slow and aggressive demand to be constrained. So we predict that the need for further tightening will lessen as inflation is generally projected to ease further in the second half of 2023. And as such, we expect central banks we approach the end of the policy tightening in the later part of the year as inflation shows more progressive trending lower. And I think, in fact, we can see more policy easing, such as what we saw in China and also in Vietnam, because the need to boost and sustain the economic recovery. So far, in July, we've seen that the Bank of Canada raised interest rates by 25 basis points to 5%, and the Fed and the ECB will meet next week, and we expect 25 basis point hike by the ECB, which will bring the interest rate to 4%. The risk skewed to the upside for additional rate beyond July. And as for the Fed, I think the cooling inflation data for investors bet that the Fed FOMC would hike the Fed fund rates one final time in July. And the market consensus remain unchanged for 25 basis point hike by the Fed, with more than 90% of chances had priced in. I think the decelerating employment and prices have allowed the FOMC to slow the pace of monetary policy tightening, and the end of the current rate hike cycle appears to be drawing close. We expect one more 25 basis point rate by the FOMC in July, and after that we look for a long pause followed by, I think, eventual rate cut starting in the first quarter or early of second quarter in 2024. I think market also had priced for something similar, and at this juncture, I think it remains too premature to determine whether Fed will conclude its tightening cycle following this month anticipated rate hike, or if another increase will be on the horizon. And I think if you look at the central banks in the emerging markets, they are more explicit in the fact that the tightening cycles, I think, have ended. Inflation across, for example, Latin America, emerging Asia, and also Eastern Europe is softening, and combined with currency stability, many central banks have implemented policy space to begin easing monetary policy. And so far this month, we saw the Reserve Bank of Australia, Bank of Korea, the Reserve Bank of New Zealand, and also Bank Negara cap rates on whole. So I think as major central banks continue to signal the intention to further tighten the monetary policy, we anticipate that the cumulative impact of these rate hikes will become noticeable from third quarter of 2023 onwards, and this will likely lead to a decrease in both demand and also economic growth. And I think if we look at the next slide on the risk, I think several potential scenarios could derail our forecast. For example, like I think we still have pressure from the inflations because with the employment we have been increasing. That will increase the demand, and with higher demand, and then we might see the demand pull inflation coming in. So the inflationary pressures will continue, and another risk will be on the financial imbalances. For example, like what we saw, the collapse since March of 3 US banks, and also the turmoil like the Swiss banking giant, Credit Suisse. And although the tighter global financial conditions have the potential to hinder demand by exerting pressure on credit flow, and geopolitical tensions will continue, and the escalation of the war in the Ukraine, escalation of tensions around Taiwan, and also China, basically will add to the downside risk. Okay, on the Malaysian economy, basically, I think this the next slide will show us our key indicators. We expect the economy to grow by 4.5% in 2023 as compared to 8.7% in 2022. The risk to growth outlook fairly balanced, and the OPR, we expect it to be at 3.3%, but there's a possibility that the Bank Negara will hike another round, but we will go through it later. The IPI, basically the Industrial Production Index, has been affected by the slower manufacturing PMI, and also slower demand, and that will pull down the IPI numbers. We also have a CPO price, which is at 3,005 for this year as compared to 5,000 last year, and the Brent we expect to be around 90 to 100 USD per barrel as compared to 101 per barrel last year. I think the commodity prices will continue to ease from the 2022 peak, but we remain well above the pre-2021 levels. And in the next slide, we see that in the first quarter, our GDP grew by 5.6%. Basically, it surprised the market on the upside because it was basically led by the 5.9% gain in the private consumption. The continued improvement in labour market pickup in tourism-related activities and sustained investment were among the factors that led to such an higher growth in the first quarter. I think it also reflects that the 100 basis point rate hikes delivered by the Bank Negara Malaysia between first quarter of 2022 to first quarter 2023 was a normalization rather than the tightening. And moving forward, I think the economy is expected to grow at a slower pace in third quarter and throughout the second half, mainly due to the waning lower base effect, because what we've seen in the second, in the third and fourth quarter last year, the numbers growth was very high. So that base effect will comes in and that will pull down the GDP numbers in the second half of the year, the third and the fourth quarter. And I think the absence of pandemic stimulus will also have impact on the global economy, because what we've seen in the last year, the impact of the stimulus package was one of the reasons why the economy grew quite high for 2022. But we see limited downside risk to domestic growth during this quarter, mainly due to our expectation that domestic demand will continue to support growth, supported mainly by a further expansion in the services sector, specifically the tourism and transport-related subsectors as the economy reopens. And what really support the economy, as you mentioned, is domestic spending. And if you look at the latest distributive trade sales, it expanded slightly in May by 6.6%, but it's worth noting that the growth rate of the retail trade has shown sign of moderation. The retail sales grew by 5.0% year on year, and on a monthly basis, the retail trade declined by 2.7%. I think this moderation suggests a potential slowdown in consumer spending and demand within the retail industry, reflecting a slower retail trade performance in online retail also decreased and recorded a negative 0.8% year on year. But I think overall growth in retail trade highlights the strength of the consumer demand and the resilience of the retail industry in Malaysia. And looking ahead, the upbeat momentum of domestic demand will continue, underpinned by the resilient labour market, easing inflationary pressures, and pick up in tourism activities. The unemployment rate, as shown in the slide 12, we saw that the unemployment rate and also participation rate had held unchanged at 3.5% and 70% respectively in May. And that basically signaled a stable labour market conditions. The unemployment rate remained unchanged for fourth straight month after showing consistent improvement since August 2021. And unemployment also averaged about 3.5% in the first 5 months of this year. I think the job market remains in good shape, as reflected in continuous positive growth in employment, the decline in employment, and also lower jobless rate. And there's still room for the labour market to improve further, as the total vacancy and in the labour market is still around 3.6 times higher than the pre-pandemic level. And based on the latest number by SOCSO, most vacancies are skewed in the manufacturing, construction, wholesale and retail, and support services. So I think Malaysia's unemployment rate is expected to decline further to 3.5% in 2023 and to return to pre-pandemic levels of 3.3% or below. And our jobless rate forecast basically implies a monthly jobless rate to largely move sideways during the course of 2023. And inflation, I think inflation, if you know, edged lower to 2% year-on-year in May, which marks a 9th straight month of deceleration and the lowest since April 2022. The year-to-date, as of May, the inflation averaged 3.4%, and core inflation in May is for the sixth consecutive month to 3.5%. And I think, again, similar to what happened to the global economy, the initial high inflation was due to the supply shock because, for example, shortages of raw materials, the bottlenecks in the supplies. And once the economy opens, then we saw the demand shock comes in, and that put the inflation remain at a higher level. But I think improving inflation conditions is expected in the second half of the year, and I think the our baseline view assumes that we will see some subsidies will be pulling out, and that will be on gradual basis. And once that's why we are maintaining our inflation outlook at about 3.4% for this year. As for OPR, I think we expect Bank Negara to maintain status quo on policy rate for the rest of 2023 as inflation rates are expected to decelerate and economic momentum may falter in the second half of 2023. But I think given the total 135 basis point hikes over the last 12 months, the OPR has now reached its pre-COVID pandemic level. But one point that we noted from this statement, the latest statement, the monetary policy statement in early of this month, is that quote, in light of the continued strength of the Malaysian economy, the MPC also recognised the need to ensure that the stance of monetary policy is appropriate to prevent the risk of future financial imbalances. At the current level, monetary policy stance is slightly accommodative and remains supportive of the economy. So that statement, I think, could imply that future interest rate adjustment remains a possibility depending on how the economy and core inflation indicators evolve for the month to come. And hence, this poses an upside risk to our baseline OPR forecast, and a further 25 basis point is not totally discounted to our 3% baseline forecast. So, but going forward, we expect Bank Negara to continue to remain vigilant in monitoring the external factors and take the appropriate actions if needed. And okay, currently, if we look at the currency market, we know that ringgit has strengthened slightly. It's gone down from 4.66, 4.67 to now about 4.53, 4.54. One of the reasons is because of after the US CPI numbers came out, there's an expectation that July will be the last rate hike from the Fed, and that expectation had been priced in, and hence ringgit strengthened slightly because of once US stop increasing the interest rate, basically the demand for US will decline. But there's still a lot of uncertainties on these issues, because if you look at what the Fed officials have been has been saying, basically, I think the Fed officials say that they still need 2 more rate hikes, but markets looking at only 1 rate hike. So I think after July rate hikes, there will be another 3 Fed meeting, which is September, November, and December. So I think along the way during the next from July to September, we might see a lot of talks by the Fed officials, and that is where we have to take a hint where is the interest rate future will lie, because once we get the hint that the Fed will totally pause the interest rate hike, and then we might see the ringgit and other currencies to strengthen further against the USD. So it's crucial for us to monitor the news flows, especially from the Fed, and the hints on the Fed fund rate. But I think on the fundamentals, I think the ringgit are strong. The primary factor to our ringgit forecast is our view for USD to peak, and we believe that it's already peaked at 4.67 levels, and I think ringgit will also get support alongside the other regional currencies such as the Indonesian rupiah and also Thai baht on better economic growth outlook for the ASEAN countries, and hence the ringgit will benefit from the US dollar correction, but upside remains limited because if we look at the currency market, I think the ringgit is quite highly correlated to Chinese yuan, and currently the Chinese yuan is quite weak, and I think that will pull the ringgit advancement in the second half of the year. But overall, I think we are still bullish on the ringgit outlook for second half 2023, and that will be a positive to our economy as well. And I think if you look at the fiscal budget for 2024, the budget will be tabled on the 13th of October, and we expect the subsidy rationalization initiative to be tabled and full implementation expected in 2034. And what we expect to see is, for example, goods which be affected by the SRI, for example, like petrol, sugar, leaf flour, cooking gas, and electricity. I think we will see some adjustments to the prices, and I think those, especially in the what you call T20 income brackets, will be affected, but not in the B40 and M40, because I think for B40 and 40, they will be the targeted financial transfer, and I think we might see some maybe cash transfer or cut in the interest, cut in the income tax for those in the B40 and 40 to support them once the subsidy is taken out. And because of that, we expect inflation to remain elevated in 2024, but that will be the only transient. And I think what we've seen on the investment, I think we've seen some the investment growth of the country has been favorable. And if you look at the slide, we saw that recently, in fact, 2 days ago, there's an announcement that Geely will be uh, investing about 10 billion in Tanjung Maling, and they also that will basically provide the employment for the country as well. So beside that, we earlier of the year we saw that there's a investment from I think uh, other two companies which will, I think, basically help. For example, Amazon in which are expected to invest about 6 billion USD over 14 years until 2037. And also the Texas Instrument, which plan to inject about 14.6 billion ringgit to expand operation in KL and Malacca. That was announced in March and June, respectively. So that basically will help support our economy as well. And quickly on the Sarawak economy, as mentioned by Dr. Nani, the Sarawak economy is the third largest contributor to our Malaysian economy, and it contributed about 9.5% the highest contributor was Selangor, and also second was KL, Wilayah Persatuan Kuala Lumpur, and Sarawak remained as the third highest, same as Penang, and same as Johor, and Penang was further down. And I think the state economic structure for Sarawak is diverse across all sectors, because primarily, I think primary sectors, agriculture contribute about 11% of the GDP, and mining around 21.1%. And I think if you look at the inflation numbers, Sarawak numbers been below national average, and the average annual inflation rate for the period of 2015 to 2021 for Sarawak is about 1%, as compared to Malaysia's 1.6%. If we look in details, basically the reason why Sarawak inflation still high is because of food prices. So I think because since 2021 to 2021 to May 2023, the average food inflation in Sarawak is about 6.3%, and in Malaysia it was only about 5.4%. And in terms of total trade, Sarawak contributes about 5.8% to Malaysia's total trade flows, and it is the fourth contributor after Johor, Selangor, and Penang. And I think about 75% of the total trade goes through Bintulu Port, and 11.2% through Sejingkat, and 6.3% through Kuching. And the unemployment rate in Sarawak has consistently been lower than national average since 2016. The beginning in 2015, Sarawak had successfully reduced the unemployment rate to 3% in 2017 and 3.1% in the 2019. And I think if you look at the state government post-COVID-19 development strategy 2030, or PCDS 2030, Sarawak aspires to be developed state by 2030 with an aim to have economic growth by 8% per annum in 2020 to 2030. I think that's basically conclude presentation on the economy, and thank you very much.
Imran, quick question. Do you think that the global growth will be revised in the October release by IMF?
Possibly yes, because when it was in early of the year, when China reopened the economy, I think IMF, the World Bank, they are very positive on especially on the China economy. But however, what we have seen in the first half of the year, the Chinese economy only grew by 5.5%, and the economic indicators that have been coming out from China also shows that their economy is slowing down. The demand is not there. The youth unemployment is very high, at the record high. So I think that will have a impact on the forecast by the IMF, also World Bank. And similarly to maybe to US, where initially I think there's expectation that US economy might goes down to technical recession towards the end of the year, in the fourth quarter or third quarter this year. But as the inflation numbers have gone down, the expectation of interest rate hike by the Fed also had gone down to most of the market expect it will be the last rate hike in July, and there will be no more rate hike. So that basically changed the scenario, and I think that will help support the US economy as well. So we might see some changes and revisions in the global economic forecast by the World Bank, also the IMF.
Additionally, based on all the data that you collected, yeah, market or the policy maker or even the market participants expect one or two rate increase by US FOMC, yeah, Imran?
Okay, if we look at the CMA Fed survey, uh, for July, it's already built in more than 90%. In fact, the last one I checked was about 93% chances of Fed rate hike. And for September, uh, there's no expectation because I think market expect it to remain, and they wanted to see how uh, the data comes in. But if you look at November and December, I think the expectation reach about 40 to 50% at the moment. And if you look at what the Fed officials have been talking recently, last week I read the FOMC voters, I think from, if I'm not mistaken, from Chicago. She did mention that the inflation is still high, and if they look at the annualized core CPI for 3, 6, and 12 months, it's still high, and uh, they expect to see further rate hikes. That is from the Fed officials itself. So that's why market now, since his speech about it, the market, although still believe that July will be the last one, but they are open for another rate hike in November or December before the Fed uh, give us a hint that they will pause and start cutting interest rate. So that's why the interest rate cut by the Fed has been pushed further to end of first quarter or early of second quarter 2024.
Is there a possibility of US inflation to rebound back, Imran?
Yes, because if you look at the employment numbers, their employment numbers has been on the increasing trend, and with the wage growth also been quite strong, and because of that, I think there's a possibility of demand pull factors coming in again and push the inflationary pressures in the US. So that is why I think the Fed are not yet comfortable that on the issues, especially on the labor market, and that's one of the reasons why I think the Fed is talking about another two rate hikes in the second half of the year.
Your view on subsidy rationalization initiative?
For Malaysia, I think we expect to see SRI coming in this 2024 budget, and again, I think those affected will be T20 because if we look at what happened last year, close to 80 billion subsidies was allocated, and according to the news, I think about 30 or 40 billion was by T20, used by T20. So I think they can cut that, if they can cut that numbers and use it for any other development projects, and then that will be meaningful to the economic activities, economic growth. So I think the SRI will be we can expect SRI to comes in, will be announced in the budget, and then we see gradual implementation in the 2024.
Okay, finally, one last one, Imran. Your view on OPR? There are another two policy meetings, September and November. Your view on that?
Okay, as mentioned, basically, I don't expect to see any rate hike by the by the central bank negara, because basically we are at 3% now, and the normal rate is 3.25%. But I think that will be the buffer for bank negara if the numbers and the data that we come in from now until September or November is not as what bank negara expect. We might see another round of rate hike, but if everything is under what bank negara expect, and then we don't have we don't think that bank negara will hike the interest rate.
So the view is that depending on the employment market, labor market condition, what do you call, OPR may remain status quo until the end of the year, yeah?
Yeah, it depends on labor market, it depends on the prices, inflationary pressures, because I think if the employment number comes in very strong, and then like what happened in the US, once we reach the for example, according to bank rate, 3.3%, 3.2% is considered as full employment. So if we reach that numbers, it means that the wages will be coming in, and once people are comfortable with the job, and then there will be a demand for goods and services, and that will push the prices higher. So that's why I think once we reach that full employment levels, and then there's a possibility that the bank negara to come in and tweak the interest rate again. But for now, we just have to monitor what the employment numbers and also the prices.
Thank you, Imran, for the insight and economic outlook. Slightly more longer Imran's presentation this time around, because we are at a crossroad. Our budget 2024 tabling, the tabling of our budget, fiscal budget 2024 is less than 3 months. Next week is the what we call the US FOMC policy meeting for July. There could be what we call another round of increase by 25 basis points before likely FOMC to retain the rate. And then, of course, that could have an impact to our market. So thank you, Imran, for a very insightful presentation. Now, while the team is actually loading and preparing to what do you call load Adrian Lau and Mr. Adrian presentation. Now, the next presentation is on OM materials. Would be presented by the managing director Adrian Lau. He'll be talking like hydropower as a key enabler for sustainable ferroalloy production. Now, just briefly, I'm sure Adrian is at the lobby now. Adrian Lau is the MD for OM Materials Singapore, the marketing and procurement arm of OM Holdings. He has a decade of experience in commodity market. During his tenure at OM, he has held various managerial positions. I met him several times. Note that he's very well versed of his products and his market understanding. Just before I pass the mic to him, he completed his Bachelor of Science in Mathematics at University of Chicago and holds a Master of Finance from Princeton. Adrian, if you are at the lobby, they can load they can load the slides now. Adrian, over to you. Then I will moderate on the question and answer later. And anyone who has a question and answer, do type that at the chat box. So that I can moderate it with Adrian later. Adrian, thank you for joining us today. It's always a pleasure to have you. Adrian, over to you.
Thank you. Thanks, Dr. Rosnani. Thanks for the very kind introduction. So maybe in terms of timing-wise, about half an hour for the presentation. I know we are a bit behind, if that's okay.
You can go longer. I think a lot of clients, quite a number of them would like to know more about you and also your company and your products. Yeah,
Okay, okay.
you can
Perfect,
stretch it a
perfect.
bit. Yeah, no issue on the timing lah. Yeah.
Okay, okay, understand. Thank you. Look, ladies and gentlemen, thank you very much for taking time to listen, to our presentation this morning. I think like what Dr. Rosani was saying, or I mean, the title of the presentation, is hydropower enabling ferroalloy production, and most of the people I talk to don't know what ferroalloy is. So, I think through this presentation, I hope to just give everyone, sort of snippet, quick tip of the iceberg introduction to the ferroalloy industry, and then also how hydropower plays into all of this. And at the end of the day, the weather has been very hot in the last 2 weeks, and how doing what we are doing is important, for the sustainability challenge. Okay, so on screen you can see our plant in Sarawak. This is the best time to take a picture. We took it during sunset, but it's along the coast lah, basically, and it's halfway in between Bintulu and Miri. So that's where the Samalaju Industrial Park is. Was founded to take advantage of the hydropower, originally with the Bakun Dam. Okay, so I will just jump straight into the presentation. Thank you. So for OM Holdings, now we are very much a processing company. So the picture that you saw right in front, that is today our flagship asset. I think over 60 to 70% of earnings actually derive from our smelting operations. Now, historically, we have been a mining company. We have operated a mine in Australia, Northern Territory. It's one of, I think, 5 mines in NT, for over 15 years, and recently we actually closed that. And we have also been a trading company, in the past. That is how we got started in the industry. But from the time we started until today, so from incorporation 1994 until now, we have only focused on ferroalloys. And amongst ferroalloys, we have largely focused on manganese and silicon. And we have not been venturing into other industries, but really focusing on just 2 elements and the supply chain for these 2 elements. Okay, the key strength of the company, I would say today, is our hydropower contract with Sarawak Energy. Obviously, I think if people who are familiar with the area, these power contracts came in when for sort of pioneer companies that invested in the Samalaju Industrial Park, and we are 10 years in now, and we have got 10 years more to go. Okay, this is 350 megawatts. So our industry, is fairly niche, and I think we are quite unique in the sense that we are operating in Southeast Asia, in Asia Pacific, and we're actually dual listed. Our primary listing is on the ASX and a secondary listing on Bursa. So I'll talk about all the other things, cost curve and everything later on. Okay, so just a quick snapshot of the company today. In terms of the corporate front, most recently we announced a dividend policy in March this year. So after many years of engaging with shareholders, investors, we are still a growth company. We still believe that there's still a lot more room to explore and develop in Sarawak. And until we reach that, the idea is that we will distribute roughly 20% of NPAT, of course, subject to usual sort of considerations. But that is our target. Of course, post growth, I think we will achieve in the next say 5 to 7 years. Then we will be in a position to distribute much more of what we are earning. So all the other details you can see on screen. I think I won't bore you by reading the numbers, but one thing that everyone likes to ask about is our borrowing. So I think maybe I just touch very quickly on that. You can see FY22 total borrowings there on screen, 254 US dollars million, and cash about 50. So net debt is about 200 million. But maybe I just give you a sense of this breakdown. The 254, about just under 200 million is project finance. So we took on a project finance from a syndicated sort of PF structure with 5 banks, and I think originally we must have spent over the years, over 500 million US dollars on the plant. So now that amount is just, the amount that we owe is just under 200 million, been repaid over the years. And then about 50 to 60 million is a revolving credit line for raw materials. So, just to give you a sense of what goes into that number. Okay. And, the rest of the ratios, I think you can probably research. But of course, if there are questions, we can come back here anytime. Okay. So this is our board of directors. I think between the six of them, there's a whole, many decades of experience in various fields. Basically, our chairman, Mr. Lau Yi-tong, founded the company, and he originally started in a Japanese trading company, trading ferroalloys and manganese ore, before founding OM Holdings. So I think what is interesting also amongst our directors, besides the fact that their experience obviously spans many fields, from banking, law, ComSec background, engineering, and so on, is that we are very well diversified. So we have directors in Australia because of our ASX primary listing. We have directors in Singapore because of headquarters in Singapore, as well as, of course, directors in Malaysia from our Bursa listing. So I think the directors are able to contribute tremendously in what we're doing now, as well as all our growth plans. Okay, next, please. So a quick snapshot of where we are today. So for listeners who are familiar with the company, I think you will find this meaningful. But for those who are new to the company, I'll talk through everything, and then we can come back here again if there are questions. Okay. So in terms of corporate updates, we declared a dividend of 1.5 cents Aussie dollars for FY22, and in our first quarter update, we repaid 7.3 million US to project lenders. One key update also for us is we are now trying to produce metallic silicon. So this is again, sort of metal for the future. Also plays very strongly into the renewable story. But we had to suspend that commissioning temporarily, and we are looking to resume in Q1 next year. Okay. For our production itself, for ferrosilicon, manganese, you can see the charts there. Basically, we are more or less running the same as what we did last year, about 75% capacity utilization. We hope that, in the second half, we will actually be able to just squeeze a bit more and outperform what we did last year, especially because now with, economy sort of, unfortunately, easing, there's a lot more room in terms of labor, in terms of manpower, and also in terms of raw material supply to be able to quickly bring production online. So that's something that we're looking forward to in the second half of this year. Okay, next slide. So with those updates and sort of key facts out of the way, I think I will first start by talking about the key operations of the company. And so, as I was saying earlier, if you take away one thing, is that OM Holdings is mainly our Sarawak operations today. So right on top, you can see Sarawak, Malaysia, 100% owned now. We are producing just above or around 500,000 tons capacity. I wish it was million, but this, if you look at it compared to our plant in China, it's many times larger, right? So this plant was 75% owned, and in December last year, we bought out our joint venture partners, Jaya Mata Sarawak. They own 25%, and we bought that out for $120 million. And now we are very pleased, to share once again that it's 100% owned by OM Holdings. So that actually, the Malaysian operation is the key sort of crown jewel for the company, and in the smelting space. If you look at the bottom left-hand corner, that is mining. Okay, so these are the three pillars of the company. And for mining, we have 100% owned mine in Australia, which is the one that I said right at the start that we used to be a mining company, but now we are reducing that because that mine in December 2021 reached the end of its mine life. So what that means is there's still ore in the ground, but beyond a certain level, because you have to keep removing, you have to keep stripping the soil, the strip ratios become unsustainable, and it reached its natural end of its economic life. And so what we're doing now is a lot of rehab, maintenance, respecting the environment, sort of returning it to original state. At the same time, we are also recovering all the waste that has been produced in the last 15 years, put it through a recycling plant and take out as much product as we can. So we think that we can probably deliver, quite a fair bit more product in the next 5 years before fully closing that plant. Besides Australia, okay, actually the main contributor for this segment is our investment in in a South African mine called the Chippy Bawa mine. And so the Chippy mine is one of the world's largest manganese ore mines. If you think about it, in terms of the scale, the world trade of manganese ore is between 20 million to 30 million tons. Okay, Chippy's production is 3.5 million tons. So this is one of the world's largest manganese ore mines. Actually, half of it is also listed on the Australian Stock Exchange under the name Jupiter Mines, JMS. Okay, and we own 13% of this mine. Okay, so the last segment is really logistics, sales, procurement. So I won't talk more about it, and we can move on to the products. So in terms of our full range of products, again, it's the same things that we've been doing for 20 plus years. The first product is manganese ore. So manganese ore, like its name suggests, it comes out from the ground. Ironically, it's the fourth most consumed metal, after iron, aluminum, and copper, because steel making consumes a lot of manganese ore, but most people haven't heard of manganese ore, not surprisingly. So there's something interesting about manganese ore in that there's a different application, not the same production process as the one we have in Sarawak, but by using a chemical process, you can actually produce a raw material that is used in the battery industry. So that is very, very nascent. And I think right now we don't have a good understanding of the supply demand dynamics yet. But I'm just putting this out there because we get a lot of questions about it. When are we going to go into the battery space? I think we are watching very closely, but not now, right? Not as of this moment. Okay. So what we do, which is called pyrometallurgy, is through, as its name suggests, is through a fire high heat process. We take manganese ore, supply a lot of electricity into the furnace mix, add coke, and then reduce the ore into alloy form. So that's the second icon you can see there, manganese alloys. Okay, so manganese alloys, what is it used for? I think the most sort of simplest way of explaining this is when steel making was first invented, in the 1800s, manganese was already added. Okay, so because manganese allows the steel, when it cools, to harden, and the highest application of manganese alloys is fortunately, unfortunately, for defense applications. So if you look at something called Hatfield steel, used in World War II, super high manganese used for helmets. Also used for things like armor plating and so on and so forth. So that's manganese alloys. And besides manganese alloys, we also produce a different group of alloys called silicon alloys. Mainly, we also call it ferrosilicon. And as its name suggests, the raw material is silicon, right? So where does silicon come from? It's really just quartz. So same thing as the stuff that you find on your tabletop compressed quartz kind of slabs. It's the same material. So this is a very, very low value raw material. And silicon alloys, the main application is to deoxidize the steel. But if you look at those high concentration applications, I would point to transformers. So transformers are, if you're familiar with how it works, is a stack of steel sheets laminated. You pass current through it, and it generates a magnetic field. And so you need silicon because you need those sort of silicon crystals to create a certain orientation, and that's where I think we see a lot of opportunity for growth, because in EV it's not just about the battery. Actually, you have to think about the motor as well. And that's where a lot of high purity ferrosilicon demand will come from. And a lot of our partners have said that, to meet demand, they need to expand capacity 3 times, 4 times, in the next 5 to 10 years. And this is something that's not often talked about. Okay. So manganese and silicon alloys, people ask about the demand, and the usual sort of back of the envelope number I tend to share is between 1 to 2%. So if you look at steel making, any kind of steel mill, they will often report their steel making capacity, crude steel, and they also report obviously their production. Multiply that number by 1 to 2%, okay, so call it 1.5%, then you will immediately get the demand for manganese and silicon alloys. So it's a very, very basic metal, what we are producing, basic alloy, sorry, and you cannot make steel without these alloys, right? It is added right at the start of the steel making process. Okay. Besides the manganese and silicon alloys, there's also silicon metal, okay, where this is, you can think of it as like a very, very upgraded form of silicon alloys. And currently in Sarawak, BIMB Tech, Press Metal is also producing silicon metal they're using for their own consumption, but also exporting. This is a very high value added item because it's very hard to melt quartz and produce 99% pure silicon. The purity level needs to be much, much higher than our conventional alloys. And this is a furnace that we tried commissioning earlier this year. Unfortunately, fortunately, unfortunately, it's under EPC contract. So we told the contractors that the performance is not up to what is in the contract, and have requested them to rectify. So this is the reason why actually we have deferred the recommissioning to end of this year or earlier next year. Okay, and I think for silicon metal, besides all the applications you can see, I think the most interesting 2 applications are, number one, feeding the renewable cycle. So that means it's used in solar panels because the active ingredient for solar panels is silicon, the pure element silicon. And the second thing is, I think, something that is slowly changing. A lot of people, when we talk about batteries, we're talking about cathode chemistry, whether it's NMC, what's the manganese percentage, whether it's LFP, but the anode side, the other end of the battery, which is traditionally graphite. I think there are new silicon anode makers, and in the next 2 to 3 years, I think a lot of major car brands have said they are going to test and put silicon anodes into their car production. So I think that's something that we are also watching to see what that demand will be. Okay, next slide. So where does hydropower come into all this? You can't transform the raw materials into the metals without power. Okay? That's the long and short of it. And to give you a sense, right, we produce, I said just now, 500,000 tons, right? 500,000 tons. What is that? It's very hard. It's very abstract. It's a very abstract number. So 1 ton of ferrosilicon, okay, 1 ton, meaning 1 big bag that you load into the container, will require about 8,800 kilowatt hour, okay, to produce. 8,800 kilowatt hour, if you look at the current EV cars out there, right, their battery capacity is about maybe 80 to 90 kilowatt hour. So that means it is 100 full charges of an EV to make 1 bag, okay? And 1 bag is 1 ton, and we are making 500,000 tons. So you can imagine the amount of power that we're consuming is tremendous. And so you cannot build a plant if you don't have power. And that's sort of the key message, I think, that we would like to share as well. So that is why the stability of supply of power, right, that we have with Sarawak Energy, the 350 megawatts, we got 10 more years in the contract. The price is fully locked in. We know exactly every year what price we are paying in Malaysian ringgit. Of course, then we have a bit of a currency risk. But that is so much more secure than if you look at what the Indian producers are paying, what the Russian producers are paying, the European producers are paying. Today, I think yesterday I was looking at the daily spot power prices, day ahead power price for Europe. It's really a wide spread. They can be paying 9 cents euro in continental Europe, 4 to 5 cents in sort of the Nordic countries, and so for a smelter, and the smelters that there are smelters there, they will make a lot during a certain period, and then probably have to shut during other periods of time. So for us, I think this is really a key competitive advantage, especially in the last 2 years, and obviously that is reflected in our results. Okay, and so I think that's the reason why now Malaysia or Sarawak is a smelting hub. All the global producers are talking about, oh, what is Malaysia going to do? What are our expansion plans? And how are we positioning ourselves in the global scene? Okay, and next slide. So this is just a very nice I think picture to show, especially our non-Malaysian investors and shareholders, because I think for domestic audience will be more familiar with all the projects and that have been happening in the last couple of decades in Sarawak. But this is literally what is powering all the alloys, all the heat and fire that you see it's coming from these hydroelectric plants. Okay, next. So just to give you a sense, right? I mean, the last picture was very green and blue, and this picture is you can sense the amount of energy that's required to smelt. So this is a picture of ferrosilicon production. This is a cost curve that we have updated post-COVID. Obviously, during the last few years, I think like previous presenter Imran shared, with the inflation numbers, with so many things being mixed into the basket and things changing, chief of which would be things like basic commodities like price of coal, price of iron ore and all that. Obviously, what we have here on this curve will change. The main thing will be, I think, price of coke and coal. But I think if you've seen our previous presentations pre-COVID and the current slide and chart that you see, our position is more or less remained the same. Okay, we are quite firmly in the first quartile of cost curve, and this is not a cost curve meaning in the sense that the pure cost of production. This is cost plus delivery to customer, so that everyone is measured on the true competitive cost level. I think there are two interesting things. Besides the fact that we're obviously at the bottom, the two interesting things are, one, the main exporters in terms of volume. So if you look at the x-axis, Russia and China are by far the largest producers, right? And then we are distant third. Okay, and this is interesting because a lot of consumers, especially American, Japanese, Korean consumers, are mindful of the risk of buying pure Russia plus China. Okay, and that's where I think we have been historically a very good partner, especially for our Japanese off-takers and customers. And the second thing to note is the power source. Okay, so if you go from left to right, I'll just tell you all very briefly what the power sources are. Brazil is hydro. Kazakhstan is coal because the coal cannot be exported. OMH is hydro. Russia is coal. Norway is hydro. China is coal. Iceland is geothermal. Okay, so it's always about the power. Brazil, OM, Norway, Iceland, we are here because we have renewable power sources. But the big ones and the newest entrant, Kazakhstan, they are there because they cannot export their coal. And so I think this is interesting, not very useful information now, but in 5 years' time, when CBAM, when Europe adds all these products, not that I know they will, but in 5 to 10 years' time, as they slowly implement and tighten their cross-border carbon tax elimination, then there will be a price, there will be a value of, from the fact that I save, a few tons per ton of product in terms of CO2, whereas the other sources, when their power sources might be many times what our carbon footprint is. Okay, so I think this is something that is interesting, and it's a huge upside for the company that we don't really often talk about, or it's very difficult to put a number to, but it's nevertheless there, right? And this is true for all ferroalloys that anyone will need to produce. Okay, next slide. So with that, I'm going to talk very briefly about the two product markets because I know it's very, very niche. Most people wouldn't have heard of ferroalloys. So we start from ferrosilicon. I won't, talk about all the text and all that. But you can see that on screen, I have two things. One is the shaded area that is Chinese ferrosilicon production. And the second thing is the price of ferrosilicon in the blue. Okay, and so with the commodity super cycle in 2021, prices peaked in October 21 because of the coal shortage. I think we reached $4,000 per ton. Obviously, we all know that it will come down. So it came down, we sold forward, we delivered actually a lot of our sales in FY22. That's why the performance for FY22 was still good, even though prices were coming down. Actually, we did better than FY21. And in the last 6 months, I would say, again, because of the general weakness in global economy and especially because of weakness in China, I would say China has been exporting a lot of ferrosilicon. At the same time, they are becoming so competitive that you can see the gray area, they have actually been cutting their production quite steeply. And we expect that, it will go further down, sort of to below the historical means. Okay. And so that is for ferrosilicon, and the main competitors, I would say are China here and also Russia as well. Okay, next slide. So for manganese alloys, I think, this is a bit more complex because I have the ore as the input and then I have the ferroalloy as the output. So what I'm doing actually is I'm earning the conversion spread. So, if you're familiar with, for example, copper smelters, then it's, I have an input feed cost and then actually I have this number which I just charge to convert. Okay, for us, I think it's a very similar story. And you can see that pre-COVID, actually the blue and red line, the red line is my input cost, the blue line is my sales price, is maybe 70 to 80% correlated on a monthly basis. And so, I think from the chart, you get a sense of the reason why we're producing manganese alloys. We are just making very prudent procurement decisions on the red line, my input costs, and making appropriate sales decision on the blue line. And I'm just earning a very stable spread. Of course, month to month, if you look at individual months, the one line may be higher than the other, but if you look at it on a 18 months, 12 months moving basis average, it will wipe out. Of course, in 2021, again, with the commodity super cycle, those lines move apart. There's not much value in manganese ore because immediately the ore miners can produce much more ore than the smelters need, but the bottleneck is on the smelting, bottleneck is on the power, okay? And that is why you see the blue line can pull away so far from the red line in 2021, and of course before it closed back in 2022. So this is sort of manganese ore and alloy in one chart, and I think right now what we're seeing, the strongest competition would be from Indian producers in 2019 or 2018. So before COVID, Indian producers and the Ukrainian producers were tight in terms of export, about 500 to 700,000 tons per annum. Okay, now how much do we produce at OMH? We are producing maybe 250,000. So we're not small in terms of the sort of global stage. But after the Ukraine invasion by Russia, I think Ukraine probably has dropped down to 100,000, and India doubled to 1.2 million export. And so that has completely wiped out, all the premium, I think, during the last, I would say, 16 months or so. And that is still shrinking. So in a very real sense, we are now in a phase where, it's a war of attrition in the sense that we have to see who is going to reduce production first. And for us, I think, with the power prices that we're paying in Samalaju, in Sarawak, and with our green credentials, we will be able to last much longer, excuse me, much longer than any of these other producers will be. So it comes and goes in cycles, and we are in a bad part of it, especially with where interest rates are now, because it means that stockists will find it very, very costly to hold stock. And end users are very, very wary of what they're doing with the supply chain. But the cycle will come, and it will go. So that's sort of the picture in a nutshell for manganese ore and alloys. There's actually a lot more to be said about this picture, but we can come back later on if there are questions. Okay, so we'll just move on to the financial overview. So again, friendly reminder that we changed our presentation currency to USD with effect last year. Here I'm talking about full year FY22 numbers. So I do appreciate that we are in July and very soon that we'll have to put out sort of our first half 23 numbers. But this is what we achieved last year, okay? And so from a sort of declining market environment, which was still good, we managed to sort of push a lot of sort of high margin sales into FY22, generated 68 million US profit after tax to owners, and it sort of matches to our EBITDA of 160, and we generated quite a bit more cash. Historically, cash from operations matches EBITDA quite well. The reason why it was more last year was because of this unwinding in working capital, because we were holding so much inventory at plant because of COVID worries about supply chain shocks. So last year we unwound most of it. That translated into cash flow. Okay. So I'll talk briefly about the breakdown of EBITDA, but I think this slide will probably leave for everyone to digest later on. I think if I can just draw your attention to one thing on this slide, in the bottom left-hand corner, on an adjusted EBITDA basis, so we stack up all our contributing entities. You will notice that trading and associates more or less is there consistently. But for smelting, in the last 2 years, it has been a very consistent and significant contributor to the group. The orange part, mining, FY18 was great, but as we approached the end of the mine life, especially in FY21, there were a lot of costs, but then there was very, very little production left. And so, that is now almost gone. It's just sort of care and maintenance costs left before we restart for the sort of final phase of mining. Okay, next slide. So, with that, all that, sort of goes, the cash that we generated, in FY22 went towards investing and financing. So financing really means that, we are just repaying our debt. So if you look at the two charts, right, top and bottom, they basically tell the same story, that we are trying to lower our gearing ratio year on year, while paying a sustainable, manageable dividend, 20% profit after tax, and at the same time, finishing our growth, right, finishing the last stage of growth before we sort of call the Sarawak project completed, and then just optimize around what we're doing in terms of our emissions, our efficiencies, and whether we can position ourselves as a world-class smelter that's worthy of admiration from conventional Western smelters, and in fact even the Chinese smelters, because there has been so much environmental scrutiny in China in the last few years that they have raised their standards a lot. Okay, so I won't talk through the numbers. I think quite a few of these numbers I've actually talked about in the last few slides, so we can just move on to the sustainability part. Yep. So I talked about this briefly, I think, in the smelting slide, but I think for us being an industrial player, the E and the S and the G, of course, are all important, but the E is especially important because everyone will look at this and ask, are you all meeting the requisite standards for operating a heavy industry? And so for us, if you look at what we are putting out into the air, into the ground, into the water, these are three things that are very, very critical to control. Okay, and we have all the targets listed here, and there are more reported numbers in the annual report. If you can take a look. But by far, I think the most important two things are, one, your physical waste, what you're doing with it. So we are trying to consume as much as we possibly can in a circular way within the smelting environment. And two, what is your CO2 footprint? So if you can see, we have reported all our Scope 1, Scope 2 emissions in the chart below. And if you read the annual report, there's more information, but these numbers are with assurance. So we had PSI assurance for this year, and in the future we are still doing more in terms of life cycle analysis to really quantify, because we want to be in a position where whichever year this happens, if Europe, US, Japan says, okay, I want to tax you at borders, I want to be able to generate a certificate immediately to say this is my carbon footprint, has been audited. Okay, so that's on the environmental side. On the social side, I think being a very, very new industry in Sarawak, we try to localize the workforce and help with training and support as much as possible. So this is just a brief list of the things that we are doing. But we have transited. When we first started, I think we were 70% foreign. Now we're more than 70% local. And last year we signed agreement with UNIMAS to provide this pathway, and build this career ladder for graduates who achieve a cert with UNIMAS. Place them in a industrial internship program, traineeship program, and then allow them to have this, very, very clearly plotted out pathway to reaching, deputy superintendent levels, and so on and so forth, and thereby, creating a ecosystem in a sense, a social ecosystem in a sense, for people in this industry. So we are not the only ones in this industry. There are other smelters in Samalaju Industrial Park, and I think this benefits everyone. And it's a sort of circular system that will create better efficiencies and better workplaces for everyone. Okay, next. So, with that, I think we're just going to talk about our future plans. So on screen, you can see a very brief summarized roadmap where we talk about 2022, 23, and future plans. So we are going to produce about the same as what we did in 2022. You can see the output there. The furnace deployment numbers are there. One thing, unfortunately, we have to say, metallic silicon, we have not been able to do even one furnace for 23, so definitely not two, but we did run one furnace for a short period of time in Q1. We will look to commission that next year. So past this year, I think the future plans, 6 ferrosilicon furnaces, 8 manganese alloy furnaces, 2 metallic silicon furnaces. Those are all there in place. It's a matter of commissioning them and running them to reach the full capacity. The last one you see there, MN alloys in green, right? We plan to build 2 more. This will be the final, growth stage in terms of growth phase. In terms of smelting. 2 more bigger furnaces, increase the efficiencies, effectiveness. And that will bring, I think, us to about 700,000 tons per annum, and that will be, the terminal stage before we just continue working and optimizing other parts of the plant, engineering, carbon footprint, and so on. Okay. So with that, I think we reach, the end of the presentation, but we are really a very simple story now. It's just I have a lot of energy. I've locked it in for 10 years. I have a lot of expertise in this metals industry. We know the customers. I actually, some of the Japanese customers or Korean customers, we've been supplying the same people for 15 years, just from different plants. In the past, we started by supplying from someone else's production. Then we supplied from China, our own plant. Then China put out export tax, and then we supplied from Sarawak. So we've been in this market for over 20 years. So it's just power plus know-how, transform that into alloys. Hopefully we are doing something good for the renewables transition and supplying that, and then you just ride the market day in, day out. It's still a commodity at the end of the day. So volatility, I think a lot of people underestimate the amount of volatility there is in commodity markets, but it's just a fact of life. And yeah, weather the cycle and wait for the upside. So I think in terms of upside, I've talked about earlier, price on carbon, cash distribution, post growth, blah blah blah. But one thing I haven't talked about is heat recycling, which in I think 4 or 5 years ago we put this on our slides, and then people asked, is it realistic? We went and did a it's very simple pre-feasibility. It was not really realistic. But now we put it back because I think a lot of plants in China actually have put on heat recycling. So what this is very simply, in a nutshell, is we have a lot of furnaces. It's generating a lot of hot air. Hopefully that's not what this presentation is about, not hot air, but take the hot air, pump it through sort of turbine and power plant, and you can generate actually quite a lot of power. And so that is what we plan to do, and we will be able to, we expect to generate 30 to 40 megawatts of power just from the heat. And this will do two things. One, it will lower the cost of power, and two, it will lower the carbon footprint of our power. So that is, sort of the last expansion plan after we do the two furnaces. And hopefully we will be, in a much better position then. Of course, the market will do what the market will do, but we're not in this industry to speculate around that. Okay, so thank you very much for your attention. Took a decent amount of time, and yeah, happy to answer questions now.
Thank you, Adrian. Just to let you know, I received about more than 20 questions. If you're ready to take it on.
Okay,
let's one
bring it on.
thing you mentioned yet your dividend, just a bit on your financial, about 1.5 cents. Is that official dividend policy, or is that absolute numbers or percentage wise your dividend policy?
Oh yeah, so the 1.5 cents was FY22's number, but the policy itself is 20%. So I mean, we here we give ourselves a range 10 to 30% of net profit after tax, but I would expect on average we will be distributing 20% of NPAT.
That would be I will take it like it's a minimum 20 lah.
Around 20 lah. Let's call
Around
it.
20 lah, huh?
Around 20,
Alright,
yeah.
okay.
Officially minimum is 10.
Yeah. Last year, because of COVID, there's a lot of plant being closed because of the cost of power escalated. How's the consolidation so far? Is it still going on? Is it stabilized?
Yeah, so with the cost of power, a lot of plants closing, I think mostly has happened in Europe. Some of these actually, they have closed and they have not come back. And some actually have had to go to governments for special assistance. So actually in Europe, it's very mixed because the governmental assistance, although it's all EU, but actually they're distributing it in different countries to different sectors. So I think some like Eastern European companies are complaining that their smelters cannot start because the government is not giving subsidy. But for like, I think France, I think, there is some support. And so these smelters are continuing. For other parts of the world, right, I would say actually in India is a case in point because the power prices increased, but the selling price increased so much that they could cover. And now they are in a situation where they have actually also committed capex to expand capacity. But the government then increased the power price. I think about 9 cents per kilowatt hour US cents. So I don't really see that consolidation has happened. I think I have in the past talked about potentially consolidation, but unfortunately, unfortunately, or I mean, it doesn't really change the supply landscape in that sense, right? Nothing has happened on that front.
Yeah. Now that the natural gas price has come down so much, if I'm not mistaken, currently at 2 BTU compared to last time, what 8, do you think that this shutdown they will restart back the activity, or how does it work for those that started the closing down their plants, especially in China?
I think in China, those that made money in the last 2 years, they probably can afford not to close, to be honest. And for them, it's very coal-based, right? So if you look at coal prices, actually, similar to natural gas, coal prices have also come down quite a fair bit. So I think now that everything has come down together, there's again, some kind of margin to make. So I think they won't close also in the immediate short term, to be honest. The plants that actually matter, I think, in Europe, with energy prices coming down, we have to be mindful that we are in very hot summer. Also, hot summer applies to everywhere in the world. and very soon it will be winter. So with the war still going on, I think I would be cautious about saying whether or not they are going to restart. They might not. But I do understand that a lot of these plants have, in a sense, receive, let's say, understanding with the government that in the next 1 year, 1, 2 years, they may be able to restart, right? But then again, by the time that happens, we have to see then what are the Chinese doing, what are the Russians doing, what are the Indians doing, because in India, for example, the main issue that we're all talking about is Andhra Pradesh and the power prices. They've had 3 rounds of increase this year. And from what I understand, anecdotally, a lot of the producers are, making losses of $150 US dollars per ton. So, it's a very critical phase right now, of this commodity cycle. So we are going down at the bottom, maybe a bit more to go. What's going to happen now? So that's something that we're watching, almost on a daily basis.
Yeah, I think Mother Nature is very angry. Just a side, in Italy, I read yesterday that there is currently a heat wave there.
Yeah.
The temperature reached up to 42, 43, unheard of.
Mm.
Malaysia, normal temperature is about 37, 38 plus minus, at night about 27. You mentioned earlier on it was very hot in Singapore, is it?
Yeah, the last 2 weeks, very, very hot.
They're very hot, yeah. So we wonder whether this year the winter is going to be severe or not, because last year it was not at all.
That's
So
right.
then again, it will help to to bring down the price, the crude oil price, because demand is not that much. But that aside, I always think that you have a niche because of you are using hydropower. Yeah. So I think you're due to sign a new contract with Bakun. However, if I remember correctly, that will be adjusted annually for inflation. So can you share with us the prospect of that? Is it a green light? Is it still a yellow light? What is it the outcome of your negotiation with the Bakun people?
Yeah, I think it's actually still too early to say. So I think previously we said that our power contract expires in 2033. So 10 more years. So we will be obviously talking to them and engaging them, but not for another few years, or until 5 years. But I mean, the reality of it is the plan is there, and we're employing 2,000 people, so it will definitely continue. I think until then, until we reach that stage, it's very difficult to say what the next phase of negotiations will look like. But for now, actually, you're absolutely right. The annual sort of escalation inflation factor applies to our current contract. But this is the same for everyone lah, that's in Samalaju Industrial Park.
So meaning you are relatively insulated from the volatility of the global commodity prices because you're using hydro and because
Definitely.
of the certainty in supply of electricity. Am I right?
Definitely.
Are
Yeah.
you the biggest? Are you the biggest user for Bakun power?
I think precious metal is quite a bit. So unfortunately, no, we're not. Yeah, I think precious metal is using a fair bit more.
Okay, all right. Your strategy because you are priced in dollar. Your strategy in the event of there is a volatility in dollar in the near term.
Yeah, that's a great question. So it's not our company's sort of management philosophy to hedge or manage too many things through financial markets or interventions. So but we are cautiously monitoring that. So I think like what Imran was saying just now in the last presentation, whether there's one hike or two hikes will matter a lot to what our power price is, right? Because at the end of the day, we look at it in a USD term. But I think suffice to say, even with sort of a more normalized USD, this will apply to everyone, right? And so at the end of the day, what I'm looking at really is what is the power price in ringgit compared to CNY, compared to INR. And that's what matters from a fundamental long-term perspective, So the short-term kind of things will come and go. Of course, we try to manage a bit slightly, but not significantly. But so sorry, not really answering your question, but yes, it will affect us. And yes, we are thinking about it, but I think the fundamentals are the fundamentals, and that will probably in the long run have nothing to do with the USD.
Can you go a little bit more deeper on your ESG strategy? I think you got what do you call an edge there because you're using hydropower. So is there any other initiative for your ESG? I think hands down you are higher better than the rest because you're using hydropower. How about other
Yes.
initiative for you to boost your ESG? Because this
Yeah.
relates so much to your sustainability of your operations, given the strong appetite for ESG now.
Yeah. So I mean the pipe dream or the gold standard is to be neutral, but I think it's quite challenging to be neutral immediately. So we are really, I mean, so something very telling, right? We have not put out a carbon roadmap because we ourselves are not convinced by a lot of the roadmaps that have been thrown around. So if we break it down, right, I have scope 1 and scope 2. Okay, scope 1 is what I'm emitting myself. Okay, and where does that come from? That comes from a physical, chemical process. I have oxides which come from the ground. Oxides need to be reduced into metallic form, and to reduce oxides, you need carbon. So Mn2O3 plus C carbon will give me Mn metal, and then CO2 carbon dioxide. So you cannot run away from scope 1. Only thing you can do for scope 1 is to say, I'm not going to use coal. I'm not going to use coke. So the steel mills are saying, let's use hydrogen. Okay. And, I mean, there are talks about hydrogen in Sarawak, right? But this is, number one, very, very expensive. I don't think the global market is in any position to pay for a complete transition of C into H, right? So then what are you going to do with the reduction process? Because this is something so fundamental, unless you're going to do like acid leaching or like something that's totally different from what we're doing now. But if you say we stick to, furnace operation, then I have to source the carbon from somewhere else. And the established process now is Brazil. There are some plants run 100% charcoal. It's like a very luxurious way of operating, instead of driving a Toyota, they're driving a Bentley. And I think that is coming from, potentially, I don't know for a fact, but potentially from deforestation. So that is one way, actually. I think recently we I think announced and sort of picked up by the media as well that started this rewilding initiative to rehabilitate certain areas in Sarawak. For sort of Mother Nature to sort of come back and do its work. But I think there is potential in other areas to manage and grow our own carbon in the form of trees, and then take that into the process. But how far you can push this is really a question mark, because it's very, very untested, I think, in this part of the world, and definitely in China as well. So that is something that we are looking at. It's a bit premature to say that I'm going to do 100% carbon neutral by 2030, 2050. But that's something that we are looking at to bring down scope 1. Okay, scope 2 is power from our CO2 footprint from our power providers, and so that directly comes from obviously Sarawak Energy. And what the grid mix is, to reduce this number, you can buy renewable energy certificates. That is something you were looking at, but until you can put a dollar value to it and say, okay, I'm going to pass this cost to my customer, I can manage on a, it's a good part of the cycle, I can manage it. I think it's also premature to say I'm going to reduce the number to 0, right? Because there is also a lower bound, even if you are using hydropower, the number is not 0 because you had to build it in the first place. And that CO2, is being generated in one way or another. So all that is to say that, we have some thoughts about how to reduce the scope 1 and scope 2. We have not put it into a roadmap because we ourselves are not convinced about, fully reducing it and how far we can push it. So a lot of this work will take time, and that's something we're doing, over the next 3 to 4 years, engineering, understanding the sustainability, strategies for other companies, what the big picture is, and then also something that I mentioned earlier is generating, waste heat generation of power. That obviously will bring down the scope 2 as well, because I would say I have 350 megawatts now. If I plus another 30 megawatts that is essentially carbon free, except for, besides the original sort of capex PPE that has a certain amount of carbon footprint, then I can lower my per unit scope 2 emissions, right? So that's another way to lower it. But I think in the next 2 years, the idea is to put all these things together, have it verified, and then put out a roadmap to say how we're going to decarbonize ferroalloy smelting.
How about governance? I mean, just as you are in the forum now, the boardroom composition, the diversity, all that. Can you share a bit on that?
So I think in terms of governance, we have since we listed on Bursa, I think two years now, we have been obviously required to have domestic, local directors. But before that, I think we've had a long sort of history of being listed on ASX. So we do try to meet all sort of diversity standards, and rotating our directors in and out, especially balancing sort of Singapore, Australia, and now with Malaysia in the mix. So in terms of experience, tenure, gender, I think those are all things that we look at and sort of try to mix around. And I think this also applies to management as well.
How important is the policy support? I mean, is this your license is renewed every 20 years? Is it like that? 30 years?
So the operating license, is it, to run a smelter?
Yeah.
And yeah, so I think that's not really an issue or a risk factor at this point. I think it probably the most significant one is at the power renewal point, how we're going to renew and what price we will renew at. So that probably is, I would say, looms larger in our minds than the operating license. That's not of great concern.
Mm-hmm. So if there is a change of administration at the federal level or whatnot, they will not affect any of you lah, because you
Our
have been
view,
license. Yeah.
yes, yeah. Our view is that it will continue business as usual.
Okay, just one more or two more.
Okay.
Expansion plan, anything? Then how would you fund the expansion plan?
Yeah, $1 million question, Dr. Rosnani. So, look, I mean, to be honest, it's no secret lah. We're not in a good part of the market cycle now, right? So we are all fighting, trying to squeeze each other out. Thankfully, we are in a much better position compared to the rest. But we have to see through the cycle. I think wait for the next uptake. The plan is to right now, as I mentioned earlier, we have project financing. It's still, the whole structure is still a greenfield one, so we plan to refinance that at a more rational sort of interest rate level. Then from that point on, the idea is to just take on incrementally slightly more debt, and then generate the rest of the required cash for expansion through our own operations. I think we should be able to do that in the next 5 years or so. It might be, the thing about commodity cycles is you can never predict when it will come. So I think it could be 1 year, 2 years, 3 years. But we are confident that we will be able to generate that, fund it from OPEX lah. Then likewise for the next, so two things, right? One is 33 MVA furnaces, 2 furnaces, and then the second thing is the heat recycling plant. So these will be done, from operating cash flow. As and when, conditions permit, depending on interest rate levels, share price, we will then consider other ways of financing. I think some shareholders also asked about this, and our view is that, the just based on the current shareholding structure, our chairman is still a big major shareholder. A lot of directors are. There's no need to unnecessarily dilute just to quickly grow, because that is value destructive at this point in time. So we tend to take that philosophy, and yeah, I'm sure the sort of between what is happening in the equity markets, interest rates, sort of fixed income markets and commodity markets, there will be an opportunity in the next 2 to 3 years. So we're not too concerned about that.
Is it safe to say that when China economy boom, you also gonna boom? Your company also boom? Is it?
Not always the case. Not always the case. There was one year, I think, where Chinese economy boomed, and then Europe, Japan, Korea all tanked. And that year, manganese ore price was very high, but silicon manganese price was quite low. But then on the flip side, then ferrosilicon prices were very high. So that's why you have a good product mix, because it will help to buffer out. So of course, in a general sense, rising tide lifts all boats, but I think there can be exceptions to that lah.
Second last, has there been a change in appetite for your product since COVID time, during COVID time, post-COVID time, and now? Is there any change?
Yes, it's terrible now. The thing is, there are a lot of stockists in the past, they will hold 2 months stock. So how do they manage the price volatility when it goes up, then they will top up, and then anyway they are going to sell some stock at the price level. But the thing is, if you hold 2 months stock now and you're paying 7% interest cost, then that is a dead business model. And so actually a lot of the demand destruction that we're seeing, right, is not just from the steel making, because steel making, you can see Europe minus 10% year on year steel making, right? The car productions are lower, construction is lower, but just from the stockists alone, that 2 months inventory going from 2 to 0 around the world, in the US, in Europe, in China, in Japan, especially in India, that is has destroyed a lot of demand. So I would say that is actually something that people don't often look at, but is a big factor. So between the cut in steel production and the reduction and increase in interest rates, that has actually reduced demand a lot. A lot of people now are buying, in COVID, October 2021, I could sell someone March 2022 cargo fixed price. Now if I sell something, they will say, okay, can you deliver it next week? So the mentality is totally different, and I think, but it's this kind of thinking that will then trigger the next cycle, because everyone has no inventory. There's no more stock left. When they want to place an order, they expect that the container can arrive, in 2 weeks' time, which it's just a fact of life. I think commodity cycle comes from human nature.
Adrian, I cannot thank you enough for spending an hour with us. It's never easy to get you. However, parting words before your session ends. Anything, some for your investors, potential investors that are interested with your stock?
I'm not very good at these parting remarks, but I mean, if there's anything, look to the long term. I think look at the fundamentals. Don't look at the current cycle, because it will come and go. Yeah, so fundamentals are power, carbon footprint, and what we're going to produce for the future. So hope that helps.
Yeah. We look forward for you to come down to KL very soon for some roadshows, but I'll engage with you later. But then again, thank you so much, Adrian, to you and to your team.
Thanks,
for
Dr.
spending about 1 hour.
Ansari.
Always nice to have you,
Likewise.